Okay, we're live. Hope you're having fun. Having fun with it all. Okay, what's up, everybody? Welcome to today. I don't even know what day it is. Thursday, the 9th of December. It's right there in front of me. Sorry, my voice is still working its way back. Still got a little bit of a I guess it's still a cold. A little bit of a croup in my throat. So I just sound a little bit weird. But today I'm excited we get to talk about budgeting for small businesses. I got some great stuff for you today, at least in my opinion. I think it's great. Something that's actually really been a huge help for me in my business over the past couple of years. And I'm going to share all that good stuff with you guys today. Now, for those of you who are just joining us and just getting on, make sure that you comment. Now, I know the other day we found out that a lot of people didn't understand how to comment. If you are watching, like if you clicked on the link and you came into this live and you're watching this live, on the top of it, it actually brings you into your browser. Up at the top, it has a little button that says Open App. If you go and watch this video in YouTube, if you go into the app in YouTube, you can actually, there's a button that says Chat, and that allows you to get in and comment. So make sure that if you're hanging out with us today, that you go over to the actual YouTube app and click in the comment section. Comment, let us know that you're here, that you're hanging out with us and watching, and heckle me. I don't care. I mean, let's have fun with it. So maybe today might be one of those days that everybody's like, I don't want to talk about budgets. Like, because honestly, if you know me, my wife, I'm sure if she saw this, she was like, what? Sam's going to talk about budgeting? Like that word, that vocabulary doesn't exist in our home. Like, I don't budget well, but I actually do. Believe it or not, I actually do, in a lot of ways, live with a budget. I have a budget. It doesn't mean that I follow the budget. It just means that I have a budget. And every year it gets a little bit better. But I want to talk today about like what it takes to make a budget for a small business. Now, the reason why I think that this is really important is because I found myself too many times in my life where I'm like, I need a budget. I need to create a budget for my business. And I get in and I'm like, okay, well, I don't have a clue what's going to be coming in next month. Like next month could be $100,000 or it could be $2,000. Like or it could be nothing. Like it could be nothing next month. You just never know. So how do you create a budget based on that scenario? But that's what we're going to talk about, how to budget for small businesses. And, like I said, I'm really excited to share this with you today because there's some really good information. Now, the thing that I want you to understand is these are not ideas. These are not my own ideas. I'm going to share with you some tips, some steps on how to budget. But then at the very end of this video, I'm going to share with you really the meat and potatoes of how I budget my business, and the ongoing everyday system that I use, of which, like I said, it's not my system. It's something that I learned from somebody else who's a friggin' genius. I've talked about it a lot. Most of you will know this and figure it out before too long. But that's what it is. For those of you who are on the text list, you probably saw the quote that I sent out. A budget is telling your money where to go instead of wondering where it went. That quote is by Dave Ramsey. Hi, Brandy. Welcome. Watching and heckling from Ohio. Thank you. It's great to have you here. So I personally like Dave Ramsey. I shouldn't share my opinions on Dave Ramsey. Dave Ramsey is great and he's got some incredible stuff, but like trying to live without the benefits of credit, like there's so much to it. But of course, like that's a whole nother topic. I don't want to get into it. Dave Ramsey is a smart dude. He's helped a lot of people. He's even helped me in a lot of situations, understanding some simple things about budgeting and business, because I've been through that on my journey to figure out how to take care of my money better. This morning when I was driving to work, I was like, you know what? I wish that I had the same sense now in my business, or like the same sense that I have now in my business, like how I'm investing, and like instead of just blowing every damn dollar I have, I'm actually putting it to good use. I'm actually being somewhat, I know most people believe that all I do is blow every dollar I have, but I'm actually being somewhat responsible with those funds. But back when I was like, when I wasn't making nearly as much money as I am now, but I was making a lot of money in photography as compared to what I was used to, I was just like, I was doing everything. I was blowing it on everything and I was having fun. But this morning when I was driving into the office, I was like, man, I wish I would have known then what I do now, and I'd probably be in a really good position right now. I mean, even then, like 5 years ago, one of my video guys was like, dude, you should buy this cryptocurrency called Bitcoin. And it was like $25 a coin at the time. And I was like, dude, that crap is for the birds. Like, you're stupid. It's never going to go anywhere. I encouraged him not to buy it. I think he bought like 3 coins for $75. If he still had those, I think he bought pizzas with it or something. The first company that came out that accepted Bitcoin as a form of payment, he used the Bitcoin he had. But if I had bought Bitcoin then, like even $100 would be worth like 200 grand right now. So anyway, you can't focus on what you should have done. You just got to focus on what you do from here forward. And that's kind of the goal here today. So that's what we're going to talk about. So I'm going to give you a couple of different steps. Like I said, by the end of this, I'm going to share with you really the secret to how I've figured out how to budget. But I'm going to talk about just some basic steps in budgeting. So number one is look backwards and examine your past revenue. So the first thing that I want you to do is to pull out your old taxes. Like look at whatever you're done. Now, I get it. If this is like your first year in business and you're just trying to make it happen, that's going to be a challenging thing. And, but regardless, look back at the past. Look at what you've done. Because no matter where you are, if you're sitting here today, you did something yesterday and you did something the day before that, and maybe even a couple of months. And look at those months and take it month by month. If you spent $5,000 on education in June and we're sitting in December and you still haven't made $1, I mean, you're at a different point in your business where it's like you have to invest in yourself a little bit before you can get something out of it. But for those of us who have been in business for a little while, and even those of you who have struggled in business and haven't figured out how to make it just kill it, you can still look back at your taxes and look back at your profit and loss statements and look back and see, okay, so this year I spent this much money on this, and this, and this year, the year before I spent. The historical data is going to tell you a lot. That's basically what I'm getting at. You got to look at how much money you made and look at the percentages, break it down and determine those percentages. Now, the next thing, the step 2 to that is I want you to determine your fixed costs. Now, what the fixed costs are, I'm going to lose my voice even more today. What your fixed costs are, or example of fixed costs, are rental, like studio rental or lease rent. So for instance, I have my fixed costs for this building. Some of you might throw up in your mouth a little bit. Well, I might have to math this, but I think it's right around $94,000 a year, or 89. Do you have your calculator? Mm-hmm. It's like $6,700 times. Oh, your phone doesn't like you? Okay, no, Mia's phone doesn't like her. Or if any of you guys have a calculator, $6,700 times 12 months. I'm pretty sure it comes to $86,000 or $96,000. I haven't done it in a couple of weeks or months or years. I don't know. 72,000? Yeah. Okay, so I was way off. So $72,000. Either way, that works. So the nice thing is that I know that my rent it will change in March, but I know that the cost, it's a fixed cost. Payroll, payroll can be variable and it can be fixed. Like I prefer it to be really pretty solid. So I know that, hey, if I'm paying this many dollars per hour, this is how much it's going to be over 30 hours a week for 52 weeks. So you can understand that fixed cost. Now, the things that you're missing are the additional, like workers' comp, all those things that are going to factor into your taxes at the end of the year or through insurances. But even better if you can look at, okay, well, last year I paid Mia this much money. And so I can actually use that number as a really good defining like number for determining those fixed costs. So payroll is one of those things. Asset depreciation. This is one of those that I'm just dumb about. I don't understand it. Talk to your accountant about it. It's one of those things that like it happens. You have to deal with it. Just figure it out. And your accountant is going to be the best one to talk to about that. Now, taxes. Taxes, again, talk to your accountant. But I can look back at last year and say, okay, if I did, and I'm just going to use small, simple numbers. These are not my numbers. I'm just going to use small, simple, round numbers because it makes it easier, because you guys saw the other day when I tried to math in front of you, it was atrocious. If I do $100,000 in revenue for the year, and that's what I did last year, I can go back and look at it and say, okay, well, I paid $20,000 in taxes. Let's just say that for a round number. So I know that that's 20% of what my $100,000 revenue is. So I know that number's not going to really change a whole lot unless I make like 3 times that or double that, whatever, wherever I kind of step into another tax bracket. Now, taxes actually work. A lot of people think that, oh, well, if I step up into that next tax bracket, I get taxed for that tax bracket down through all of it, but that's not actually how it works. You get taxed in the tax bracket until you surpass that tax bracket. Then the remainder of the funds, so let's say $101,000 to $190,000 is taxed in a higher tax bracket. You're taxed in the lower tax bracket until you hit $101,001. So if you make $101,050, you're only taxed on that higher tax bracket for that $50 above. I know that sounds really crazy, but that's one of those things. Insurance is one of those things that is going to be relatively fixed cost. So think about all those fixed costs: payroll, taxes, insurance, rent and lease. Some of your equipment costs, like you could have like an equipment budget that you spend every year. Now, the next one I want you to think about is the variable expenses. Now, these are where you can get into like your utilities, marketing, education, development, supplies, cost of goods. It can be really challenging, but there's a couple of different things you can do with like utilities to make them more of a fixed expense. For instance, like with power, you can call the power company and say, hey, will you put me on, what is it called? It's like, it's not a fixed, it's basically where they look at the last 12 months of data and they average it out over the next 12 months and they give you a, what is it? No, it's I can't think of the word. This is like the Gazoon type thing. But then you at least know that, hey, my utilities or my power or most like your internet and stuff like those are going to be the same month in, month out. So you just have to look at them and see and determine, are those really a fixed or are they a variable expense? Now, education and development, you can either make that a fixed thing, but more often than not, that's going to change because, for instance, like I put my travel and stuff into the education aspect. It's not level pay. That's what it is. Laquita got it. Thank you, Laquita. So like my education stuff, like prices can go up and down. Like imaging this year is only $59 for the actual event, but the venue, or sorry, not the venue, but where you stay, that might be more expensive than it was last year. So that's not a fixed cost. That's a variable cost. But when you're determining those numbers, it can just really be broken down into how it works best. I'm going to get to really how to determine those numbers best here soon. Now, one of those variables that's always going to hurt or always going to be challenging, but this actually works out really well when you build it into your cost of doing business per hour, which if you haven't gotten that worksheet and worked it out, go to the website, sevenfigurephotographer.com, go to the shop and select the cost of doing business per hour worksheet. It's a free download. Go get it, download it, and it's a no-brainer. Figure out what your cost of doing business per hour is. But the more business you do, the more your cost of goods sold, like that number doesn't necessarily, the percentage doesn't necessarily go up. But if I sell 70 canvases this year, but then I sell 125 canvases next year, well, my cost of goods sold is actually, the number is going to go up. Is it still the same percentage year over year? It can vary. That's one of those weird ones. And plus you just never know, because those are a variable thing. Like this year we've gotten price hikes up the bunghole. What? I couldn't think of a good word, so I come out with the bad ones. So we've had price hikes like crazy this year. I've had frames that have gone up 3 times this year. In fact, I even just got a new price guide for frames for like the 3rd time or 4th time. I got a new one yesterday. So, and then also a lot of those companies are going under, like paper. We print our own stuff here, and some of the gloss paper companies have just completely gone out of business. And so we're struggling with some of those things. And when I say gloss paper, I'm talking about don't worry, your lab has not run out of gloss paper, I promise. I'm talking about for laser digital color production. So those are just some of your variables. Now, the next thing I want you to do is create a profit and loss. Now, if you have Pixify or a lot of the even Tave or 17 Hats, most importantly, or the one that I would suggest using, but if you can use any one of those, it's great. Go into QuickBooks and you can pull a profit and loss statement. And it's literally as easy as clicking profit and loss report, January 1 through December 31, and click profit and loss. And it gives you your total revenue minus your cost of goods sold, your expenses, and other expenses. And it tells you, okay, this is your profit for the year, this is your loss, and it breaks it down into really simple categories. Now, if you get really detailed in it and you get in, like for instance, I go in with QuickBooks and I label everything so that I can actually look at my cost of goods sold and say, okay, well this actually falls into like supplies. So supplies for printing, or supplies for paper media, or office software. So that's one of those things that I have, like I really like to have an idea of subscriptions and software subscriptions. So they can be different ones, but I like to detail so I know, okay, this is how much. Last year we spent $23,000. Actually, it was this year we've spent $23,000 on software subscriptions, which boggles my mind. And I've got to dive in and figure out where can we cut those things. Now, that's where the next part of this comes into it, is the future planning. Because how do you determine, if you understand these things, how do you determine what you're going to do in the future? Now, some of the things that you can do, and one of the things that we really try to do, is when you go to trade shows. So January, February, March, we travel a whole lot. We go to conventions for education. We go to conventions for just learning about new products that are coming out. We go to conventions to purchase things. So oftentimes I buy my printers when I'm at WPPI. So I know every year, like I'm planning to have cash in hand to go to Las Vegas, and hopefully I make it to the convention where I buy a printer instead of gamble it away. Not that that's really an issue, but I do have fun playing that. So the reason I tell you this is because I have like all these software subscriptions like Adobe. If you go buy, what is it? I found, I think it was SD cards this year. I found an SD card that gave you a month of free Adobe services. And so I bought multiple cards because it gave me multiple months of free Adobe service, which saves me money. I needed the cards. I need the service. So how can I cut costs on that? Now, at some of the conventions, you get to see some of the companies, they always have trade show deals or trade shows. So this is the one time where it sucks because you're entering your email or you give your email up and they scan your email and you get crap all year long. It floods your email box. But this is the time where they offer like Black Friday deals or show specials. One of them, like Shootproof. We use Shootproof. We have to upgrade our Shootproof right now. So I know I'm like just holding on because I know that when I go to the trade show, they'll have a show special. And I hate that I do this because we don't want our customers to do this, but it's the way to save yourself some of those expenses. And all I'm going to do is I'm going to take advantage of some of those show specials to save myself hundreds of dollars on one software. And then if I go to another one, I can save a couple $100 there. And sometimes you just save a lot of money by doing a full year in advance or a full year's worth of that product. Some of those companies even have, if you spend double their year rate, you can get like a lifetime plan. And that saves you a ton of money. Pixify, did that once with Pixify, paid like $500 or $600 up front and got like a year and a half worth. So those are things that you can look at how to help in the budgeting aspect or to trim some of that money down or some of those costs. Now, what I typically do, and this is how I have figured out really the secret to how to budget for a small business. What I do is I take my taxes for the past year and I divide everything up into percentages. And the first thing that I look at is what is my percentage paid. So say for instance, we're going to use the $100,000. Out of the $100,000 I made in revenue, what percentage did I pay in taxes? That's the first thing I'm going to look at. How much did I pay in taxes? And so if I know that I paid $20,000 in taxes, my tax rate is going to be 20% of everything that I made. Okay. I know that my lease or rent for my building is $72,000 or whatever. We're going to cut it down to, we're just going to say it's $11,000 for the year. So that I know that then it is 11% of my business. Now, the number one thing that I want you to do before you set or identify any of those percentages is take your profit first. And there I just gave you the secret. It's Profit First by Mike Michalowicz. It's a book. If you haven't read it, go read it. It's the number one most important thing I do with any of my coaching clients. I first make them read or tell them to read. Some of them do it, some of them don't. If you don't, I'm going to kick your butt to the curb. But all of my coaching clients have read it. But basically, what you do is you're going to take that profit first. And that could be 2%. It could be 10%. I don't care how much it is. Just identify how much money you're going to take first for profit. Then you have your fixed percentages. And you have, this did not go back for me. Okay, here we go. Wow, it's not. Okay. So if you have your $100,000 and you're going to take 10% of that as profit, that's the first thing you do. 10% is $10,000. Then you consider your absolute or your we called it, your fixed costs, which is taxes, your payroll and lease rents, and you determine those percentages. So for instance, if you take 100% and the first 10% is profit, 15% is taxes, 10% for employee. That means you got $10,000 to pay an employee. If you don't have an employee, you can just take that one completely out of there. Your lease and rent payment, $11,000 or 11%. And then it gives you right then that you have a total of, basically 54% left for your cost of goods or your operating expenses and owner pay. Now, obviously, if you're in business, you need to pay yourself. That should be one of your top things. But it gives you an idea of what percentage you can use to pay yourself. Now, for me, what I do is every bit of money that comes in, every time I get a check, every time I get a deposit, I have a special account in my bank where deposits go and they sit there. They don't hit my normal operations or operating expenses account. The money goes into an income account. And so then I take it at typically I try to do this right before payday, and I go in and I start looking at it, and I take my profit, which I have my profit set at 7%. I take the profit 7% of whatever is in that account. So say for instance, there's $10,000 in that account. I take 7% of it. I transfer it into a different account. You can do this with envelopes. You could do it with a savings account and just keep a spreadsheet. You can do it with whatever you want. All you have to do is put on top of that spreadsheet that your percentage or that your total for the savings account is this, and all the percentages down through that are for that, and then just adjust it as you go. Then I move the second thing I do, and I literally do these in order. So profit goes first, then owner pay is 27%. Then the taxes at 15%. And this is just because what I do is I take the, obviously the 6% sales tax, that's going to come off anyway before that. Then I take the operation expenses, 27%, my employee payroll expenses, 10%, and lease rent, 11%. Now, the way this works out is that you ultimately, no matter how much money you have come in next month, if it's $1,000 or if it's $2,000, you know that no matter how you do it, you're going to have trends, seasonal trends. And as long as you're putting those percentages away and budgeting those specific percentages, that it will cover it for the year. So before you get into your slow time, you should have a buildup. That doesn't mean you just, oh, well, I got a lot of extra money in there, so let's just go blow it on whatever. No, you have that money set aside to pay payroll for the slower months. Now, one of those things that you do need to identify, and when you're looking back at your profit and loss and looking back, all of the systems out there, like you can go to QuickBooks, you can go to Tave, you can go to Pixify, 17 Hats, and look at the graph of your seasonal trends. There's certain things that you're going to find. For instance, if you sell ice cream, like Cold Stone, for those of you who know what Cold Stone is, or ice cream shops, do you think that they do really well in the wintertime? Probably not. In fact, in Pennsylvania, where my wife is from, they have this place called Brewster's. It's amazing. It doesn't even open until May. And then they're only open from May until, I think, September or something like that. And they sell as much ice cream as they can. Well, also, you can understand when you know those seasonal trends, you can say, okay, well, I'm going to actually hire more employees so that I can maximize my profits during those months of the year. Instead of having employees throughout the whole year, you just hire them seasonally for those years. Maybe I should do that. Should I do that? Mia doesn't like that idea. So identify your seasonal trends and determine where are your low spots. If you're in this industry, you know, at least in Idaho, I don't thoroughly know how it all works in other places, but like Texas, I know in Texas, for some people, it's just too hot to shoot during the summer. And so their senior season tends to be during the winter time. I'm sure in other places, like it depends on how your seasons work and what you do. I honestly have wondered, like we shoot out in the middle of the dead of summer, and sometimes we're in 110 degree heat and it feels like our cameras are melting in our hands, but we still do it. So I don't know how bad it is in Texas compared to that, but that's just something to consider. The most important thing in any business is pay yourself first and pay your profit first. So that no matter how you do it, you're going to make it work. When you read the book, The Profit First, one of the things he talks about is the big plate method, the more money you put on your plate or the more food you put on your plate, the more you're going to eat. So grab a smaller plate. And if you have a smaller plate, you're going to learn how to adapt to that. Anybody out there that's ever lost a job, they know how this works. All of a sudden, the money stops coming in, and you figure out a way to make it work. So this works the same way. Pay your profit first, pay yourself first, pay your taxes and your other ones, and make everything else work out the way it works. Now, the reason this has been so incredibly powerful for me is because like I said, for years, I couldn't set a budget because I was like, I don't understand how to create a budget when I don't know what's going to be coming in. And sometimes, like this year, we had a bizarre spring. We did more seniors in the spring this year than we've ever done in my whole career as a photographer. But yet then it kind of tapered off and we didn't do as many in the fall. We still had, it still worked itself out really well. But sometimes, like in January and February, sometimes I just get really lazy in January and I don't want to do a whole lot, or I don't want to do sales sessions. Yesterday I had a sales session and honestly, I was kind of like, I really don't want to do this. So like, get here and we're good. And I actually ended up getting this customer to spend more than they normally spend, because I was just over it. And honestly, could I have gotten them to spend more money? Probably. But that's the way December and January work for me. I'm so worn out. I'm tired. I know that everybody's like wanting everything done and back. I know that I have to make sure that I get employees to get stuff done in both sides. I got to get editing, have my editor have everything done. Like it's just a cluster F of a mess sometimes in December. And Tiffany, who like has always inspired me because she's like, I'm taking the month of December off. And I'm like, how the hell do you do that? But it's something that I've always tried to like, okay, let's figure out a way to make December more enjoyable. Regardless, because I'm in the print business with my CIC Pro Lab, it tends to be a crazy busy month. But as long as we set it to clear at like December 17th, we don't take shoots, we don't take anything. I take a couple weeks off and then I get into January and I'm like, I'm really enjoying this time off and I may not want to do a whole lot. So understand that as long as you have this broken down into percentages, you're going to have a really good idea of how to budget in your business. Now, marketing is one of those things that if you do marketing right, you don't really need a budget for it. Obviously, you need to decide, okay, well, if I want to make 27% of whatever I bring in, then I'm only going to have this much for my marketing budget. But as long as you have a good, solid marketing program that's bringing in money, it doesn't matter what your budget for it is because it's going to continue to bring more money and you're going to continue to take your percentage from it. So it's one of those things that it just changes as it goes on. But if you can take the time to look at it and see, okay, these are my percentages. And one thing that I do, I've actually created a really simple, I'm going to explain this to you because I don't have anything to show you. I've created a really simple spreadsheet. And I have those specific things that I just gave you. I'll tell you again real quick. If I can get back to it. Profit, owner pay, taxes, operating expenses, employees, and lease or rent. So that's 1, 2, 3, 4, 5, 6 total categories. Now, for many of you, you won't have an employee. So 5 categories. And I put at the bottom of the center column percentage, I put 100%. And then I basically take each one of those categories, profit, owner pay, taxes, and the second column, I make it just percentages. And so then what I do is I determine if profit is, I wonder if I can just show you guys this. How can I show you? I don't know. No, I don't have a way to show you. Okay, maybe I'll post an example of it on Facebook here shortly once we're done. So I'll post an example of the spreadsheet. So I have the profit down the middle. Each one has its own percentage, and all of them need to total to make 100%. So you can change the percentages to determine, okay, well, this is this percent. The third column, I make it based on whatever the percentage is of, at the top, I put whatever my total amount is. So if it's $100,000 and profit, I put 10% in, it will show me how many dollars is profit. Now I do this because I know what my fixed numbers are. For instance, I know how much I pay in lease payment every year. So I can change the percentage until that number that percentage of the $100,000 equals roughly that number. So I know where my percentage is for the year. Then I can change that $100,000 to $200,000, $300,000, $400,000, or $1,000,000 and say, okay, well, if I'm at $1,000,000, my studio cost doesn't go up in price. So then I just adjust the percentage until it hits right where I need to be for my fixed price. Same thing with taxes. Taxes are going to go up. I pretty much know that they're going to end up being a specific percentage of said number. It could go up, could go down, but it gives me a really good idea of where I'm going to be at. I try to err on the positive side, so I just get some money back. And then I just figure that number. I'll post the spreadsheet so you can see it, but that is how I budget. So I do have a really good number for all those things. I know that if I want to make $20,000 in profit and I'm doing 10%, that I need to make $200,000 to make either $20,000 or I need to take 20% for profit. So you can kind of decide those numbers. You can even do it based on the month. You can do it based on the week. You can do it whatever. But it gives you a really good indication of, okay, if I make this much, this is the percentage of how much I need to pull out and move into different accounts so that I know, okay, well, whatever that number is, 27% of it is going to be my owner pay. So that's how much I get to pay myself. Now, I base that owner pay on what my yearly salary is. I make sure that number gets to the same percentage. So my owner pay percentage, the more I make, might be a little bit less than 27%, but it still hits that number because I consider it a fixed number. And then the rest of it is adjustable. So my operating expense operating expense category could be higher because I'm making more, but it could also adjust my profit account. So that's basically how I do it. If you really want a good in-depth understanding of how this all works, go to the website, sevenfigurephotographer.com, go to the business book of the month, scroll way down close to the bottom and find Profit First by Mike Michalowicz. Buy the book, read it like 7 times before the end of the year and implement it in your life. I promise you it will change your business and your life forever. It did it for me. It's literally the best thing that ever happened to me in business because it helped me finally, for once in my life, understand and really get a good grasp on determining what I could do for budgeting for my business because it always changes on a regular basis. So I hope that was beneficial to you guys. Any of you guys have questions, feel free to comment in there and we'll answer them. I see there's a lot of people were commenting on trying to answer what level pay was. Hi, Tiffany. Tiffany's here or was here, who already makes a business budget yearly. I try really hard, but mine's pretty much set for the year. But I'm trying to, like this year, I really worked hard on getting my taxes figured out so that when I pull my profit and loss, I can actually really dial in and say, okay, this is how much I spend every year just on stretcher bar for canvases. This is how much I spend, which is technically a CIC Pro Lab expense. This is how much I spend on printing expenses every year. This is how much I spend on software. That was one of the biggest ones I wanted to determine because I was like, okay, if I'm spending $23,000 a year, can I figure out a way to whittle a good bit of that down? Because when you can go in and understand where your budget is, the things where you can save money, that just pays you more. That just makes you more money, more potential for paying yourself more or putting more profit in for the business. Now, one of the biggest mistakes I think that people make, and I made this mistake for a lot of years. I didn't understand that profit in your business doesn't mean that you're getting paid. You should be paid anyway. Profit means that's the money that sits in the business as at the end of the year, you can take it, or even every quarter, you can take it and say, you know what, this is profit. So I'm going to cut some of it to me as the owner, and I'm going to invest it either for the owner or invest it for the business, or take it and buy new equipment with that as an investment for the business because I can do that. So those are things. I know last year, one of the biggest things I did is I took a bunch of that profit and I actually invested it, and I created more. Whoa, that just did something bizarre. I invested that money, and it just, kind of gave myself the opportunity to grow. Now, those are things that I would always talk to your, not your attorney, your tax professional about first, because they're going to have some input. Now, typically, my sister is my accountant. She hates the concept of profit first because it's against traditional accounting, but I love it because it was the first thing that really gave me freedom and took the stress away from my life with trying to figure out how and what to do. Brandy, I will actually post those. You have profit, owner pay, taxes, operating expense, payroll, and then lease or rent is number 6. So now, for those of you who don't know, if you haven't taken the time to fill out the cost of doing business per hour or the CODB worksheet, one of the things I always tell you to do is if you're working from your home, still consider at least 33% of your mortgage as your lease or rent payment. This has nothing to do with what your accountant tells you to take for office in the home. It has nothing to do with your taxes. It has everything to do with you in your business understanding that if you leave the home tomorrow and you open a studio, you will then have an expense. If you're accounting for that expense now, you're actually truly considering the expenses that really happen in a business so that you can really be profitable, so that when you move into a studio, it's not a big shock. It's not a big change. So same thing for putting money away for like auto repairs, different things like that, or camera repairs. You may not have camera repairs every month, but if you're putting $20 a month into an envelope or into an account or into savings for those particular things, then those things are accounted for. And that's where it really does work into like the whole Dave Ramsey thing. You have money set aside so that you're not using credit to make those things work. You just have cash on hand and you can say, oh, I have an expense that came up. My camera broke, so I got to send it in and get a new one. Maybe you just want to buy a new camera and have an extra camera on hand, and you have enough money to do that, but still get this one fixed. So it just really helps you a lot in those aspects, and it will help you be more prepared for those kinds of things. So that's all I got for you. If we have, let's see, here's the link to the cost of doing business worksheet. Thank you, Mia, for getting that in. But I'll also get, as soon as I'm done here, I'll put screenshot I have this one whisker on I told you guys about this the other day. And it's literally, my wife was laughing at me because I had scissors. I was trying to clip it. It's not a nose hair. It's not that, I promise. I probably have those too, don't look. But I have this one whisker that's like pointing up and it keeps hitting my nose as I talk. And I feel like I have a hair hanging like a dog hair or something on my nose. It's driving me crazy. So anyway, I hope that was helpful for you guys. If you haven't had a chance, these are the things that I love getting into. So go over to the 7-Figure Photographer website, go to the shop, check it out. We have a couple of free resources in there. One of them being the cost of doing business per hour. If you want help with that, call me. We'll sit down. We'll take an hour and we'll go through that. And I will open your eyes to realize that probably most of the time in your life, you're paying other people to take their pictures. Sad, but very true. I can't tell you how many successful, and I say that with kindness, photographers that I've worked with, they're doing well. I don't want to take the success from them. They're doing well. They're making money. But when I sit down with them and we go through the cost of doing business, like I've had some people like just blown away because they didn't even realize that the cost for a product is almost double what they thought it was because of the time and all the other expenses they have in their business they never even considered. For instance, one of them, I love this one. If you're working from home and like for instance, for us, I work from the studio where we pay $300 a month for rent, $360 a month for rent. It's ridiculous. My home has internet too, which we use, but my wife uses it every day. She edits, she works from home. She uses the internet at home for those specific things. So those are actually, a percentage of that is a cost for my business because I pay that, like no matter what, I have it. If I didn't have it, everything wouldn't jive, wouldn't work. So you have to consider the fact that it actually takes you time to create an image. I think really as a good indication, like I've determined that it takes about 20 to 25 minutes to create an image. That's the time it takes to click it, the time it takes to drive around, the time it takes to call it, the time it takes to edit it. Based on the number of images you shoot and deliver, all dialed down and figured out, comes to about 20 to 25 minutes. And so if you have, let's just say it takes 30 minutes and you have a cost of doing business that's $50 an hour, that means that there's a $25 additional expense on that product. When you order an 8x10 for $5, that means that cost of the 8x10 is actually $30. So something to consider that I don't think a lot of people do consider. So go check it out. I enjoyed hanging out with you guys today. I hope you loved it. Budgeting is no fun. I don't know why. Why do I love the unsexy stuff about business? You like budgeting? You're weird. Well, yeah, see, I like knowing the numbers too. Like that gets me more excited. I love being able to pull a profit and loss statement literally like anytime and see, oh, well, like I need to change some things. Because when you know your numbers and you understand those things, you have power. That knowledge really is power in your business. And it is freeing, yeah. So, okay, guys, have a wonderful day. I will see you again on next Tuesday. I'm not sure what we'll be talking about, but we'll see you again, and we will be talking, or I'll be talking, I guess. Hopefully I'll have more of a voice. I lost Batman. Now I just don't have a voice. Maybe he'll come back. I doubt it. Batman doesn't visit very often. All right, guys, take care. Have a good one.